Hey everybody, it's Barron Shannon from alphatrends.net. Today is Friday, the 30th of September. It's the end of the week, month, and quarter, and here's where we are for the month. The S&P 500 down slightly, but don't forget they did pay a dividend, so that likely takes it positive. And the rest of the markets were pretty much positive till you get down to the the banks and the real estate here, the dollar and the bond. But oil had a big week, up 7%, and the biotechs continue to be the laggard in this market with a 3% loss this week, but positive 3% for the month. So let's take a look at the charts, and hopefully you guys had a good week of trading. We still are being thwarted by this 50-day moving average here on the S&P 500, and this is, of course, a prior band of resistance here that turned into support and is once again acting as support here in the near term. So on the daily time frame, we're really kind of, longer term, of course, we're still in an uptrend with the market having found support at the prior resistance on the pullback just a couple weeks ago. But in longer term, of course, we have a rising 50, 100, 150, and 200-day moving average. But again, we're starting to stall out here, or we've been stalling out here on the daily time frame. It won't take a lot to get it back to positive, though, I don't think. I think that, closing back above 217.50 and holding above there would make this market look much more likely to continue the upside if we were to get back above there. So for now, we are encountering supply in this 217 to 217.50 band of prior support and resistance, and that's enough to turn the market back. But again, for the week, we did gain a little bit of ground. So you could look at that as, is it distribution before a bigger decline? Well, for this market to decline, in a significant way, it's now got some decent levels below us that we're going to monitor to see if they hold. First up, really about that 215.50 level, which is where we see that 5-day moving average, and a level that has been important here over the last month or so. So 215.50 would be our first level. If we were to break below that, then we might look for, at this trend line and see if that holds it. But for now, we're still going to give it the benefit of the doubt because overall, the longer term picture is in an uptrend. The Nasdaq, for its part, had a much better week, as we saw here. It was up 0.31%. I mean, not much better, but if you consider where we were up here at all-time highs and looking like it had the potential earlier in the week with that gap lower of being setting up a position of from a failed move could come a fast move lower. But instead, we found support along the rising 20-day moving average, which is above that 50-day moving average, and in this prior band of resistance here. So the good news is we have some key levels to monitor for the Nasdaq, and of course, the bigger picture is still very positive. But in the intermediate term, we have that 5-day moving average, which is kind of in the midpoint of the range of the last couple weeks. So 118 to 118.25 is the first level we want to see hold, and then down towards 117.50. And if we break below 117, this level in here, then perhaps we'll see a bigger pullback. And I think it's probably prudent to look at a trend line that represents the essence of trend, which would be, kind of taking this band of trend line potential support. And again, that adds to the importance of not only the midpoint of the last week, but that 5-day moving average as well. So we'll continue to give it the benefit of the doubt here, and for the bullish scenario to continue, we'll want to see that probably that trend line holds, and then we continue to bounce and move higher from there. The Russell 2000 finding a little bit of supply in here near term, just under that 125 level. We do have a rising 10, 20, and 50-day moving average, and of course the weekly time frame. It's still possible that we can hit this high from last year by the end of the year. We've got 3 months left. That's a lot of time for anything to happen. No predictions, but I'll be doing a webinar soon also, so keep an eye out for that, and I'll be mentioning that on Twitter and StockTwits. I'll be doing that for stocks that look good for the fourth quarter of this year, and I'll go through some longs and shorts, and it's not just day trade ideas or swing trade ideas. Some of these might be setting up as good investment candidates. So anyways, the Russell 2000, it's got a little bit of a band of resistance in here just now, so we'll want to see it push back above 125 for the buyers to really really take back control. And then we've got 123 and then 122 and a quarter as potential support levels. We really don't want to see this level break though, because that would keep that 5-day moving average dropping, and that would be a lower low below a declining 5-day moving average, which we obviously don't want to see. Semiconductors, they just continue to be on a tear. There's no such thing, as we've been saying for months, there's no such thing as up too much. Compared to what? You have to compare it to, are there still buyers around? In this market, we saw a strong pullback to the rising 50-day moving average, and that just probably brought in more short sellers there. My general policy is that the only, if we've got a rising 50-day moving average, that I'm very suspicious of the short side, and would only do it for maybe maximum a couple nights overnight, but only if we had a declining 5-day moving average. And this week we came down. This was the level that we wanted to see hold as support, and that's exactly where the buyers did show up once again. So this is the 66 to 66.50 is clearly the important level that we bounced from, and went on to new highs for the year and the last decade or so as well. So sell short at your own risk, but I would be looking for the first band of support to be pretty much 67.80 to 68 and a quarter next week. If we break below that, it would get me a little bit cautious, but certainly not bearish. The biotechs, these guys did find resistance up near that 300 level, obviously, and we went to cautious, but thinking maybe they could get, if they could get back above that 298 and hold above it, maybe in here it was going to be a healing process. But we also said that breaking back below this level would turn the intermediate term back to negative, because that's where the lower low came in, with a lower high just above it, below a declining 5-day moving average. So the biotechs obviously lost ground this week. In order for this group to get neutral again, we're going to need it back above 293, and then we're going to have to see how it gets there to see if we can go back to positive on these things. They closed pretty much right at the conjunction of the 20 and 50-day moving average, but the longer term, it looks like the buyers are still trying to wrestle for that control. The 200-day moving average right now is still declining, but if you consider where we were 200 days ago, that was basically right up in this area. So in other words, once we start getting rid of this data, that 200-day moving average in the next couple weeks will begin to turn flat, and then to turn higher, which then we would be looking for a possibility of a major trend reversal back to the upside. Apple this week, not much happened in there. It looked like maybe it was going to get going. We were on alert to buy it for a swing trade back above this level. It didn't happen, and now we're just kind of back into a little bit of a sideways range in here. On the daily time frame, you look at it, and it's holding its gains from that recent rally very well, but it's not moving higher anymore. I would say that below this level would be reason for concern. What we often see is sometimes we'll dip slightly below it and then set off stops and then continue to move higher. So be aware of the art of trading versus the science of technical analysis. As we mentioned, bonds got hit here a little bit. This is the area where they were supposed to lose some ground this week, as it came up to that declining 50-day moving average and prior band of support. So now when we look at a 30-minute time frame, you can see what we'll be looking for with these bonds is if they can't get back up above this level, then I think the downside bias would continue in bonds, and this might be setting up a little head and shoulders pattern on this time frame, which is a 30-minute chart, breaking below that 136.70 or so. And let's see, what else do we have? We had a great trade so far in AMBA this week. We got involved yesterday, right right at this point. We didn't want to be the ones who buy the breakout. We wanted to be involved beforehand with lower risk at that level. It moved really nicely for us, and the good thing was it actually was moving higher when we had the news on the market here. The Deutsche Bank, the market was selling off and people were panicking, but Ambarella was really going strongly, and we sold a third of it into what was daily R2 yesterday. We sold another third up here, and looking for this one to be able to continue with a wider stop on the balance. Netflix, I think, survived an important event this week, and that is that Netflix came down and looked like it was going to break down pretty good. From what we have here is a declining 200-day moving average, and the year-to-date volume-weighted average price is that purple line I had just drawn in there. Well, we broke down through some support in here, and then it looks like it's looking a lot like it was a trap to the downside. And now I think that Netflix is probably worth keeping an eye on for upside here over the next couple weeks. Tesla broke below its volume-weighted average price year-to-date a couple weeks ago, and it rallied up towards that level this week, and you can see that it fell short of there. So now Tesla is below declining 50, 100, 150, and 200-day moving average. So I'd be very careful with Tesla. For it to be back to neutral, I think it's got to get up in here and back above 220 for positive. But it's also just broken yesterday below the declining 5-day moving average, and if it can't get back up above 208 quickly, then I think there's still the risks are to the downside in that one. A couple names to keep an eye on this coming week. We had a decent trade in PayPal, but it's been pretty volatile in here. We got involved over here and got stopped out. Fortunately, that's what stops are for. But it still looks good on the daily time frame, and we've still got a decent sized short position, 23 million shares as the stock is up near all-time highs. So I would keep an eye on that one next week. I would also keep an eye on a company called Teradata. This one on the weekly time frame, you can see has this prior resistance, which has been tested and is holding a support. There's 20 million shares short in this stock, which and a short interest ratio or days to cover is 13.2 days. Looking at that daily time frame, you can see that we've still got a rising 50-day moving average, and the stock had broken down here a little bit, but I think getting back up above this prior little band of support in here is really going to put the buyers back in control, not only on the daily time frame, but of course on that weekly time frame. And if it can do that, then I think this stock has significant upside. That's the type of stock that you look at and say, it has investment potential if the fundamentals are good and you agree with it for whatever time frame. For myself, I'll be looking at this next week for subscribers, and we'll be trying to get the best entry into there with a low risk entry. What I'd really ideally like to see would be a little bit of a pullback, because it had a strong day today, a little bit of a pullback towards that 5-day moving average, break some resistance up in here, and then set a stop underneath that level for a swing trade. But again, how you trade, if you trade it, is completely up to you and your time frame, your personality, your risk tolerance, and all that. MANH, Manhattan Associates, we're in an uptrend in the market, but this one's looking vulnerable. It's got a declining 10, 20, 30, 40-week moving average, and on this daily chart, you can see it was just trapped this week below a declining 20 and 50-day moving average at this prior little band of support in here that it had seen. So this had been an important level of first resistance. It was broken, it held a support, and now resistance once again. So getting back above that, I certainly wouldn't want to be short, but this is one that we'll be looking for the opportunity to sell this one short, I would think, that in the coming week. And GoDaddy looks like a good upside continuation candidate. Looking at a 15-minute chart, the way I would like to see this setup would be kind of the same thing. Pull back a little bit, maybe create a little bit of a base here, then buy above Friday's high. But let's see, AVGO also looks good. CSTM, this when you look at the weekly chart, it's got a lot of upside potential. Anyway, that's just a sample of some of the stocks we'll be looking at. Make the ideas your own, figure out how to make money with them, or most importantly, how not to lose a lot. Risk management is job number one, so have a stop on every trade and know that in advance. Don't go by the seat of your pants.